Hey traders, hope you are well, just enjoying my coffee. I wanted to pop in today to mostly VIP members. There's been a few questions coming in, which is great. Thanks for the questions. I do appreciate them. Remember, I don't know what you don't know. So I can impart my 35 years of experience onto that and see where you're going wrong, where you're going right, and find out the reasons why I've been trading 35 years and why most traders fail within 6 months. Why is that? So we're going to talk about that. One of the questions coming recently is, what are my trades that have failed the most and the trades that have been the most successful? Really, really good question, actually. Gets me thinking as well. And I'm going to cover those as well in the next few minutes. So there's two systems that we use here at the Trading Mentors. One is the Advanced Pro charts, which have been developed over many years and have been put together so that you can enjoy it and you can save years and years of finding out what works and what doesn't work. We're going to talk about that specifically from last week's trades and the setups and how you can get your chart set up exactly the same as mine. And then we're going to talk about the other system that we use, which is the gold on steroids, how to use that, the weaknesses behind it and the strengths behind it, so you can actually get on board with that as well. So put your feet up, grab a coffee, as I've got a piece of cake there as well, which I'm going to have in a minute, and enjoy the next, 15 minutes or so, something like that. And don't forget to click on the likes, click on, what else do you click on YouTube? Put in some comments if you want to put in some comments. You can message me in Telegram as well if you have additional questions, because one thing that happens with these videos, more questions arise, which is fine. That's the whole point of learning, is finding out what you don't know and discovering what actually works for you and what works for others. Now, I've done a recent survey recently and I've messaged the most successful traders within the VIP group after they've purchased the Advanced Pro charts and the gold on steroids. And it's quite amazing, really. The people that have traded have gone from £2,000 to £15,000 in 3 weeks, £4,000 to £40K in a few months, $500 into $2,000. And I've messaged them to say what has worked for you, what hasn't worked for you, because it's not just about me. Looks like I've got pajamas on, but they're not pajamas, by the way. Just to let you know, to see what works for them, because it's an individual thing, isn't it? Okay, so what is the most valuable thing you think that might be available? And the answer, you don't know. Okay, but it's freedom. Having the freedom to do whatever you want, whenever you want, with whoever you want, at any time. Having that freedom, I've got that. I'm very, very lucky. I've got an amazing family, amazing friends. I play a lot of golf, go to saunas and do a lot of nice things. I don't brag about them. I'm not one of these which shows you the Lamborghinis and all that kind of thing. That's not my style. However, what I would like to impart to you today is that financial freedom, or freedom in part, is what we're here for. We're not here to be at the charts 12 hours a day. It makes no sense to me, especially at my age. We want to be in a position where we can put a position on, see what's going on in the markets, put a position on, and if it's ready, we trade it, and then we close it down, walk away and spend your time, your valuable time, with your family and your friends. For me, it's family, friends, grandchildren, 6 grandchildren, which are amazing. So I really want to get, even if you're in your 20s or 30s or 40s, you've still got plenty of time to get to that position where you are financially free in terms of trading. So let's get into it. Let's get into the Advanced Pro charts first, and then we'll go into the gold on steroids. And I really want to dive deep here. So please have your notepads ready if you're a VIP member, because they're probably going to generate a lot more questions here than maybe answers. I don't know. We'll have to wait and see. Sorry, I'm eating my chocolate cake now. one of the things I want you to realize is that when I started this in the early 90s, my children were like 3 and 4, things like that. So I wanted to generate something that was giving me more time to spend with them. That's the whole point of it, really. But I want you to know that it's not always successful. Being successful is a journey. It's not a destination. And so it's ongoing all the time. There's always things to aim for. So in the early days, I gave up a few times. I'd blown a few counts over a number of years, actually. And then in 2007, the banking crisis, I lost 3 million. A heck of a lot of money for anybody in any position. That hurt, and I gave up for a while, then came back and made sure that that's never going to happen again. And I don't want this to happen to you. So in this journey, in this video, we're going to talk about how to safely get into positions. Where's your entry points? Where's your stop loss? What are we looking for? Where's the liquidity zones? Where are the institutions getting in? Where are the institutions getting out? Even more important. And hopefully you can enjoy the next 15 minutes or so. So let's get to it, shall we? Get into the details, get into the points where we are looking to buy or sell and see how this goes. And I'm trying to impart what comes naturally to me. Over 35 years, things come natural, where they might not be so natural for you in the early days, especially if you're a beginner. So again, it might generate more questions, which I'm happy to answer, by the way. I am a mentor, so use me. Don't abuse me, please. So here we go. Let's look at the advanced pro charts. You're looking at the advanced pro charts. Now, you don't have to be an advanced pro to use the chart. So the first thing we're going to look at is the parabolic trends. Talk about these all the time. These are the only ones you want to be trading. And so this is the daily chart I brought up here. Let's enlarge that a little bit. So this is the daily chart on the euro yen. And what I'm going to actually do is compare the euro yen setup for last week. I mentioned this in the weekly Forex forecast last Sunday, and the ends were just about to go, and they did. So what are we looking for? We are looking for a parabolic trend. A parabolic trend is very, very simple. We're waiting for the price to move above the 20 moving average, the blue line, and we're waiting for all the buyers to step in. This is our trading opportunity. These are our trading opportunities. So once you see that condition, and that's the only condition we will trade as a position trader, the buys, the only thing we're looking for is to buy. Okay, so that's the setup. Once you have the daily chart in play, you no longer need it. You know, it's there, but you can just push it to one side. Okay, so the daily's on the left. You see that disappearing there. And what have I got here on the middle one? The middle one's a 4-hour chart. So what we have here is a number of tools which tell us where high liquidity is. Nobody else has this, or very few people have this or know this. These are not ordinary order blocks. You can see lots of ordinary order blocks, but they won't be showing high liquidity at the time as well. So this is really, really important. So let's get into the 4-hour chart a little bit. Let's enlarge that. And we can see areas of demand on euro yen on the 4-hour chart, can't we? So these blue demand areas are telling you these are the buying areas you're looking for. Okay, that's the first thing. High liquidity, high liquidity, high liquidity, high liquidity, high liquidity, high liquidity, and so on and so forth. All right, so that is where the institutions are looking to get in. Nobody else is looking at this. Only you and me. There's a few people, to be fair. I've been doing this a while. But the other thing that we are interested in the 4-hour chart is the price cycle. I often talk about this, and I will continue to talk about this. You don't want to be buying there. 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 All right, that's what not to do. Yes. 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 These are the places to consider. The other thing that you will be looking for is divergence within the stochastic as well, which gives you another edge. So if the stochastic price cycle is going higher, yet the price is going lower, then you are highly likely to see the price break out of that demand area. Now these lines are drawn, they're not drawn for fun, they are drawn there automatically by the Advanced Pro chart so that you can measure where the price comes back in. And quite often we see the price come into demand and then it doesn't like it, it has to come out. So that's your buying opportunity. It has to come out. It's like a bird catching its fish. You might have seen the animation in the VIP room. A bird flying down, catching its fish, and then it gets the fish and it goes higher and it wins. Similar situation here. So see how the price moves up, moves down. This is a 1, 2, 3 system. Comes back into very high liquidity here. The bird goes down, catches its fish, and then comes out from the sea and then flies off. Good analogy, I think. Hopefully you agree. And so that's the thing that we're looking for throughout and the trading mentors throughout the trading week. And we can see now that the price, it's the 6th of June, you might be looking at this YouTube video 6 months time, so it won't be relevant, but we can see that the price cycle is very, very high. We're not interested in buying that. That buy here has ended. Okay, it's too late. The institutions will be getting ready to drop this down and sell it. The other thing that happens within the Trading Mentors, of course, and the Advanced Pro charts, it gives you targets. Targets that you can aim for automatically. You haven't got to work out where your targets are, they're already there. Bit of a no-brainer, really. Don't know what that is, that red line. Anyway, so let's dive deeper into this. So where would you have bought it? Okay, where would your entry be? Where would your stop loss be? And well, I've answered the question on the target, haven't I? But so you've got to work out where you're going to be in terms of this trade. Let me show you the 2-hour chart, which is going to look very similar. See how the price on the 2-hour chart doesn't seem to be coming in deep enough compared to the 4-hour chart. So let me just take the 4-hour chart. See how deep it's come into the demand zone? See, it's invisible on the 2-hour chart, because if it was in here, in this area here, then you'd say, yes, that makes sense. So it's not always as clear, but it is definitely oversold. So you want to be buying low and selling high. Buy low, sell high, and so on and so forth. So how do we use this information to get an accurate, high probability, highly profitable, low risk trade? Well, let's go into the hourly chart, shall we? And we can actually have a look at this. And I want to compare this with the pound yen. Excuse me, I need a coffee. Love me coffee. Yeah, so let's go into now we know that information from left, right, top down analysis for a position trade. We want to be making sure that number one, the daily chart is trending in a certain direction with parabolic rules in play, and we are looking for price cycles to become low in the market and then hitting strong demand zones on the 4-hour. Dial down to the 2-hour if you want. And then for the execution of the trade, I would be going down to the 1-hour chart on the Advanced Pro charts. If you haven't got the Advanced Pro charts, come in, ask any questions. I will actually set your charts up if you want me to, totally up to you, and we could get you going within a few hours. So the first thing that I notice, and you probably noticed already, is the high liquidity zones. Got some messages coming in from my family. High liquidity zones automatically drawn on your chart. You haven't got to work anything out. Okay, and these are very high liquidity zones, and we're only looking for buys, aren't we? Remember, from the daily chart. So buy. So here we go. So how do we know when we buy into this position? Oh, let me do the I'm trying to think about what I do automatically so I can actually get it to you. I've done this for so long that everything's automatic. So for me, the rules are straightforward. We're only looking for buys in positions where we have parabolic trends. Agreed. Only looking for buys when the price is above the central pivot. This is the average price of yesterday. See that black line there from the central pivot. Let me just bring these up. So it's normal pivots, standard pivots, traditional auto 15. I've widened the line so you can see them, number 3, and I've blackened the central pivot because that's the important one for me. Now here's the thing, if the pivot price was coming into a pivot without this liquidity here, it would have not much relevance. The fact that it's coinciding with that gives us convergence, we talk about that, and confirmation that the price is highly likely to go up, up, up and away. So what is the execution? Where do we get in? How do we know that it's not going to come down into this area of demand or this area of demand? Well, we don't know that. We know that it's in a very strong uptrend from the analysis that we've done. We know it's in a very strong liquidity zone on the 4-hour chart, and we know it's in a very strong liquidity zone on the 1-hour chart. This is really, really key to your success here. Once we know that information, we can actually make very intelligent, low risk, high probability, highly profitable sniper trades. Sniper trades just mean you're getting at the really early part of a new position. It's not a day trade. Well, it can be a day trade. Don't get me wrong. It can be a day trade, but a position trade is better. A position trade is where you can hold it for a few hours, a few days, a few weeks. I think the longest is 6 months I've held a position. That made a lot of money. I played a lot of golf. So let's deal with the details here on the euro yen. I'll go to the pound yen and show you that as a comparison. Very interesting comparison from last week. So where do we get in? Hindsight's wonderful, isn't it? But we don't need hindsight. We don't need hindsight. We want to know how many buyers are coming into the market at this point. See if I can move that up a bit. Oh, there you go. We want to know how many buyers are coming into the market at the time that you enter your position. Let's widen that out so you can see that. This is as close as we're going to get, by the way. We're not going to go into the 30-minute. You can look at the 30-minute, but it's not necessary. So let me draw a line here. Not there. That's midnight Asian session. That's 2 a.m., 3 a.m., 4 a.m. So that is 7 a.m. London Open. Now, if you get into that position on liquidity here, right on the money, well, you're going to make a shed load of money. But you'd be working during the Asian session, trading during the Asian session. But anything can happen there. It's likely it's going to go up. Actually, 90% chance it's going to go up. But if you want to follow the trading rules as set out by the Advanced Pro charts, your position is there. Okay, see that? How the buyers have all stepped in there. It's all green. Special settings, by the way. You won't get this anywhere else. the special settings are set. It's back tested over many years. So that's your entry into that point. So let's deal with the first of all the stop loss. I don't know if you can see that. There's a line there, a green line there. Let me see if I can zoom in a bit. See that green line? This is liquidity. It's a liquidity sweep actually. That's a sweep there. So it's taking out stops. That's what it's doing on the lower time frame. On a 15-minute time frame, you'll see it much clearer. But we're not particularly interested in that. But what we are interested in, we don't trade liquidity sweeps, but we are interested in where they are, and that measures where the liquidity sweep was, taking out the stops, because people are selling it at that point, and then their stops are taken out. That's how it works. Stop hunting, as it's known. So what happens now is we make sure, if we put our stop there, well, that's 27 pips, whatever it is, that's the wrong move. Even though it did shoot up, you want to make sure that you are not going to be one of those guys stopped out because they've grabbed your stop loss. All right, so make sure your stop is sufficiently below the previous low on the demand area. And if it doesn't work, it doesn't work. But you've done everything to ensure that all the buyers are in and the price is highly likely. Well, it's a no-brainer, isn't it? So how far it goes, we don't know, of course. What we do know, actually, we can see the target here at 164.96, so 167, isn't it, basically? Nice round numbers. Round numbers are really important, by the way. 0, 0, 20, 50, 80, 0, 0. So they're the numbers to look out for. Now you can probably see already that there's another target here, 164.12. So you can argue that if the price goes to 164.12, you could move your stop up to break even, couldn't you? I mean, that's reasonable. It's a reasonable expectation to say, look, I've got that. Or you could have two positions. Ooh, well, let me do that. Two positions with two targets. One target hit, the other one bought to break even, and then the other one hits the target. Or you just have one position and just hold it. You know, there's so many scenarios you can do. But the point here is that getting into the position with all the buyers all lining up nicely with the institutions will give you far better profits than you've ever seen before. I mean, that's 175 pips. Hopefully that's helpful. Let me have a drink of coffee. I've got to finish my chocolate cake in a minute. So, what else can I tell you? Well, let's go to the pound yen now, and I will compare the two, and you might recognize why the euro yen is a better trade. Let me see if you can spot it. I will go into the trades that we're looking at. Right, so we have the same scenario as the euro yen. As you can see on the left, we have the parabolic trend confirmed, price above the 20 moving average and continuing up. We have a long-term target of 198.65. Nice move if it reaches it. So there's plenty of room left in this trade to actually get into the position. We also have a very strong liquidity zone demand area here being hit. So for all intents and purposes, we could argue that it's doing exactly the same as the euro yen, but it's not. Let me explain why. We need to go down deeper. Let's go down deeper into the 1 hour chart, shall we? Can you spot the difference? Can you spot the difference? Well, let me take you back to the euro yen. You might not recognize it. Let's have a look. See how the price is moving and staying above the central pivot, as opposed to the pound yen, which is not. So if you were being really super fussy about your trades, then you could argue that you don't want to be buying it in here because it's not in a very high demand area. It's not above the central pivot. So there's many arguments. Now you could also argue that at this point here, the buyers have all stepped in. So the probabilities of it going higher are much, much higher. Okay. Now that's all very well in hindsight, of course. But if you're following the exact rules, then of course this would not qualify and you'd be just trading the euro yen compared to the pound yen. Let me show you something else. Do I need to say anything? What else is there? New Zealand yen. I'm just flicking through because the central pivot acts as a really fantastic support area. Now in this instance here, we could argue that the demand area is not on the pivot, so this is a much weaker position than the euro yen. Okay, but nonetheless, we can see, I can widen it out a bit, we can see that this is having confluence, having positions moving into the same area at the same time is a much more powerful way to trade. So I hope hopefully you enjoyed that. I'll go into gold on steroids next and go into a bit of detail there so you get the hang of that. It takes a bit of time, I accept that. Most of you have never seen charts like this before and certainly not this accurate. So what I would say is practice, 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 and then use real money afterwards. Don't think that you can just crack it overnight like I did in the early days, blew a few accounts, lost a load of money. Because you want that consistency first before you go live. And don't forget that everything here at the Trading Mentors is educational purposes only. We don't offer any advice. Really, really important. So I'm just going to go over a few trades that we've got our eye on into Monday, the 9th of June. It's not the 6th of June today, it's the 8th. So the 9th of June, but Monday mornings is pretty low volume anyway, but nonetheless, this is the New Zealand yen, New Zealand USD, sorry. So let's have a look at this. The first thing we notice here, well, let's go to the daily. I know what's going on. We've got a buy here on the daily chart. All the buys are in, so we expect it to go higher. Simples. And we've got a pull down. We have a swing low. I want to see this price come back into demand a little bit more, which is fine. And it will coincide with the 1 hour chart as well. See that there? So I want to see this come down a little bit. It probably will because there is a liquidity zone here and the liquidity will grab it. So watch out for that. It might be during the New York session. But also note here that the price is above the central pivot, which is important as we mentioned earlier today. Now, are you going to buy it now? Not ready yet. You're certainly, if you're getting in now, you're getting in very early. And by the way, you're probably going to get a better risk to reward if the price comes down here, somewhere like that. Liquidity here at the bottom. So the stop's going to be taken out shortly. Just make sure that your stop isn't below here now. Isn't below here. Make sure your stop is below the central pivot as well, because that's where liquidity sweeps will come in. Still great risk to reward, so don't worry about that. Now, just wait for next week and then see what happens. And then once the price comes into demand, we'll be looking at this very seriously and then waiting for the buyers to come in. Once the buyers come in, we'll be going long. New Zealand Canadian is another one. Have a look at this into Demand area, very nice swing low, very high liquidity, and hitting this at the same time. See that? So we are going to see a nice move. Liquidity sweeps are actually taking place on Friday here. If you can see the taking of the stops out there. Again, above the central pivot, don't need that. You have your target already assessed. You have your target. It tells you just look left. Look at the yellow zone. That's your target. Will you get a decent risk reward? I don't know at this stage. Depends where you get in. But it should be all right. US Swiss. It's another one. We had a nice swing high on this one, didn't we? Beautiful, actually. Below the central pivot. I'm in this already, but you're going to find that the sellers come in on probably Monday. Again, go to your chart here. See that? Beautiful. So there's a few trades we've got our eye on for next week. Let's go into the gold on steroids and get into a bit of detail here. I'm going on a bit, 31 minutes now, sorry. But I think it's well worthwhile, especially if you're a VIP member, and especially if you don't have the Advanced Pro charts or the gold on steroids. Why wouldn't you? Oh, by the way, going back to the questions initially, what's my worst trading system? Oh, not the worst, but certainly one doesn't work as well as others. Well, I've just shown you the most successful one, and I use that all the time. I'm going to show you the one that doesn't work as often, all right? If you're a VIP member, you'll probably know it already. So what we have on the gold on steroids is a couple of things. We have the trend. We have the supply zones. We have this red line is a 50 moving average. So whenever the price moves below the 50 moving average, then the price slides down, 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 down. All right, that's the trend. The other thing we have here is we have outside bars. Whenever we see an outside bar, this is potential for reversal or at least a deep correction. I'll qualify that. So what I'm looking for in this kind of scenario, I'm looking to exit any shorts that I might have. But I'm also looking to possibly looking for a reversal into this position here as it goes back up again. I mean, the reversals and corrections are very deep often. I mean, this is 194 pips. You can't dismiss that. Why would you? So this is the scenario that you have in terms of the worst trading system as part of the gold on steroids software. Okay, but there is a way of increasing the performance on that by waiting a little bit longer, and I'll explain that in a little bit of detail. So we have an outside bar here, and it was on a demand area as well. We had the demand area with liquidity, but it did not work. It did not work, and it didn't come back. So the first thing that you notice is when you have an outside bar here, here, what is the difference? Can you spot it? The price finishes above the 50. The price does not finish above the 50. It's doing it now, so there's a chance this price is going back up to this resistance line next week. Very strong possibility with a very strong high liquidity zone with a positive divergence, by the way. But this exercise and this coaching is all about understanding the complex of gold on steroids and how to use it. So the system is great for going short below the 50, just sell it. And you can go into the 5 minute, 2 minute, whatever you like. Below the 50 is a sell. Above the 50 is a buy. Okay, below the 50 is a sell. All right, it is that simple. But don't get caught in a trap. As an example, if you're short here, makes sense, right below the 50, you don't want to be short here. The outside bar, 90% of the time, let's say 80% of the time, 80% of the time will have a deep correction. You'll be giving too much money back to the market. We don't mind giving money back to the market There needs to be money on the table for you to trade it. So we don't mind giving money back. So our way of giving money back is to exit that trade there and let everyone else take that. Make sense? All right. So let me deal with the worst trade, i.e. where you got an outside bar. You're tempted to get in very quickly here, and it moves up a little bit, but then it collapses again. So let me go into a little bit more detail here on the 5-minute chart so you can feel happy in taking those reversals if you want to. They do work, but I have to rewind the 5-minute chart here back to that position here in terms of the... So we've gone that back here where the price did have an outside bar, here. See that? Potential for correction, but if you get in on that point there, you're getting in really tight with fantastic performance. But if it done that and then that, then of course you've made the mistake, which is fine. But you make mistakes. But better to wait for the price to finish above the 50 on the left. And I'm lining this up now, and you can see that everything's turned from red on the gold on steroids here below the 50 on the 5-minute, and the price is now moving up above the 50 and above the 50 on the 15-minute. Crucial. And then there's lots of trading opportunities here. Now on the gold on steroids, what we say is we're still using price cycles, by the way. Price cycle is really important, but look at that there on the 5-minute chart coming down, and then the price moves above the 50. That's 100 pips there. Price comes down. Now during a session, a strong session, you probably get 2 trades like this. That's all. But they're the most powerful. Above the 50, boom. I don't know what that is. Doesn't matter really, but 118 pips. So you can get 100 pips in addition to holding the original position if you want to. Totally up to you. So where are we at now on the 8th of June? Let's have a look. So from my perspective, I'm looking for a potential buy. I have the rules in place. I have an outside bar. Tick. I have a very strong demand area here, very strong support zone with liquidity here. I have also a positive divergence. Tick. And I also have the price finishing above the 50. Tick. Good so far? So let's take it down to the 5-minute chart. We don't need to see the swing highs or swing lows because we're not in the market. Okay, so what we're waiting for, and it might happen overnight, who knows, China may buy gold. We can see that we're waiting for the price to change character. Now what I want to see is the price move up above the 50. This is measured as a 50, and so therefore I want to see the price move into this area. I'm not really bothered about that supply zone at the moment because I think it will probably get blown away if it's going to go up. And so I think this is going to go up, and you're going to bank up to here. Say there's actually a fair value gap there. So we use that as a target, which makes sense because it's on a trend line down. So potentially there is 305 pips to the upside in the next move. So it's well worth waiting for that conversion, don't you think? So I hope you enjoyed this. I've enjoyed it immensely because it answers a lot of questions that have come in, which is really useful because it makes me think as well, and also helps you with your performance. My coffee's getting cold. And so to end, please contact me. Please let me know what you think. Give it a few likes if you want. One of the things I would say, I don't do any ads. I don't do any promotions. I'm not bothered. I don't want everybody to have these systems. I just want people who want to take trading seriously, and I want people to enjoy it and get that financial freedom that we all can enjoy. It took me years to actually get and suss out the markets, because I had a mentor, Vince Stanzioni. I don't think he's around anymore. He was older than me then. So, but nonetheless, I still blew a few accounts. So you do learn from that, and you do move forward, and you can be very, very successful, believe me. And it comes naturally to you after a while. But anyway, have a wonderful weekend, what's left of it, and enjoy the markets next week.